TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Morning, all you wonderful money masters and treasure hunters. Welcome to the June 26th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely, folks, I mean absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools, just simply tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that truly is what it's all about. So let's go look at today's tool. This is the tool that I call the human spirit. Now, we've all heard about people who've exploded beyond their limitations, of just simply their conditions. These are folks that become examples of the unlimited power of the human spirit. Well, you and I, we can make our lives one of these legendary inspirations as well. All that we need is the courage and the awareness that we, yes, you and I, we control whatever happens in our lives. You see, we cannot always control the events in our lives, what I call life circumstances, but we can control our response to those events. And that's really the key, folks, the actions that we take as a result of those circumstances. Circumstances, they're simply like the wind. And when you're sailing, well, you need the wind at your back, and we decide where and when we're going to go ahead and plant that sail out there. Those folks, that folks, is what the human spirit is all about. If there's anything in your life that you're not happy with, anything, make a decision right here, right now, that you're going to go ahead and change it. There is no time like the present, because that is the gift of the human spirit, and you are the best human spirit on this planet. So let's go check out these markets. Let's go check out the spirit of these markets. Right now, futures are up. Market is up. Dow futures up 60 points, trading at 14,750. The ES Mini, we're going to check in on that first. That's the S&P futures up 0.6% right now, up $9, trading at 15.90. Nasdaq futures up $20. That is up 0.7%, trading at 28.78. Russell 2000 up 6.5 points. King dollar up 11. Of course, gold here and silver getting smoked this morning. So we're going to take a look at the metals. Light sweet crude is off about 32 cents. So not a lot of damage there in that commodity. If we take a quick peek around the world here, right now over in Europe, you've got the DAX up 117 points, up 1.5%. The FTSE joining along up 0.8% right now, trading up 52 points at 61.53. A mixed bag in Asia last night. We had the Hang Seng up 482, the Nikkei off 135, and the Shanghai down another almost 0.5% off 8 points. Our call-in number is 877-927-6648. Give us a call. We can take a look at your stock, your equity, whatever it might be that you're trading. Let's go start off by taking a look at the big picture. Normally we start off just taking a look at the 30-minute chart, the EKG of the marketplace of the S&P 500. We're going to start off by taking a look at the daily chart. If you're following us on TigerTV, you can see that chart. We've got it posted on our screen here right now. If you're listening in on the radio, I'll describe to you what it is. Thanks so much for doing that. And maybe it's your mobile device at TFNN.mobi. Remember, to your smartphone, your pad, or what have you, this show will stream live. Just go to the homepage at TFNN.com. Over on the right-hand side, you will see a button over towards the top right, button with 3 little smartphones. Click on that. The show streams live as well. You can get the archive on Channel 9. So right now we've got the ES Mini trading at 1590.75. On the daily chart, what we're looking for, are there any signs of support or resistance on the daily chart? And most certainly they are. Now, when we take a look for signs of support and resistance, I'm really looking at bearish candles, bullish candles out here. And what we first see, where the ES Mini is in essence trading into right now, is a previous line of support. That support really held as the market came down here on June the 6th, as it was making a low at the 1596 level. Now, it didn't get all the way down to support, but you're really just trying to identify those areas of support that are set up by those bearish candles. Well, we can see right here, the ES Mini back on April the 11th made a high out there of 1593. The next candle that followed was a bearish engulfing candle. So that set up a potential area of resistance. We can see that that area of resistance also acted as such on May Day, on May 1st out there, because we had the ES Mini the day before get up to a high of 1594. You can see that the May Day candle totally engulfed that prior session. That set up a line of resistance again. In fact, on May 2nd, the high out there ran right into resistance. When we saw it break through the area of resistance, that's when the ES mini went up and made its high, when it made that key reversal session day. The high, May 22nd, those are going to be the highs that are in here at least through the September time frame, in my opinion out here. That is May 22nd, the key reversal. Then we see the ES mini come on down and, in essence, try to test that area there on June the 6th. What it was doing at that stage was it was completed an A to B equals CD down as it came into that support level, because once you clear support, or once you clear resistance, it becomes support. Likewise, just the other way around. So now you can see that line going across the screen. That level of support was crushed on June the 20th. Then we saw the market go lower. As the market was going lower, it was coming right into the swing point from April 18th. It was doing that with volume. It says that we will be back down there. Now, we can take a look at that first Gartley buy pattern. We can go ahead and erase that off of the screen. So we'll do that. And then what we'll see here, now you can clearly see the A to B equals CD down that was completed as we came into the lows on June 24th out there. That also set up a Gartley buy pattern. If we go ahead and we go ahead and draw that in, we'll color that in with my magic coloring stick out here. You can see that it was a nice blue Gartley buy pattern. Now, what did we have yesterday? Yesterday we had a move higher. We had a bounce higher, a bounce. Folks, this is on light volume. This is just setting up the next B to a C of an A to B equals CD down. Whether or not, now if we take a look at this A to D move, A to B equals CD move, what you would normally do when you take a look at normal retracements, there's really two levels that you want to go ahead and measure your retracements from. The first level is going to be the large pattern, and that large pattern would come all the way from our high on May 22nd all the way down to the low that was put in on June 24th. I'm going to go ahead and try to darken that in. So you can see that the 0.382 retracement, a dead cat bounce, a normal move up, would take you into about the 1603 level. You're trading right now at 1591. That's on the larger move. If we take a look at the smaller move, because you should always take a look at the move of the C to D leg as well. And what you're really looking for is you're looking to see, are there any retracements that converge right around the same level? Let me see if I can put these in some different colors here for us. I think I had it there in blue. See if I can find red. I might have magic red on here. And the answer is, well, if I did have it, it's not there. We're just going to go ahead and we'll go back to the blue. There's red. There we go. I knew I had red. So what you can see is also coming right into this old area of support, now resistance. At first was resistance. Right inside, right where we're at, trading basically right now, 1591, 1592. That's also the 0.382 retracement, a normal resting spot for the market. This market is still in a downtrend. Look, if you're one of the few that have not had the opportunity to download my free special report, The Trend is Your Friend, just do it right now while you're listening. Go to that homepage of TFNN.com. Over on the left-hand side, you'll see a little carousel, little arrow, up and down arrow. Click on that for that free special report. Download that as well. You can test drive my newsletter service, Mastering Probability, 2 weeks, absolutely free. No credit card up front, nothing charged your credit card, just simply 2 weeks of incredible educational information as well as trading as well. So right now we can see that the ES Mini is running into some areas of resistance out here. If it breaks through this area, the question should be, where will price travel to? Well, let's go down and take a look at the shorter term time frame out here. So we'll go take a look at that EKG. We'll go take a look at the 30-minute time frame and see. Well, actually, what I want to do is first take a look at the 120 minutes. So let's just step it down from a daily chart to a 120-minute chart out here. And what we can clearly see is yesterday, price got back inside that descending price channel. Now, as we take a look at that price coming off of, now remember I was talking about that C to D leg inside the 120-minute chart. That's really going to be your highs that came in here right at about the time frame of 7:30 in the morning on June the 19th. So if you go from that high, which by the way was 1649, all the way down to the low that came in here on June 24th at 1:30 in the afternoon, that low being 1553 and a quarter out there. So you can see the 0.382 level. That's right where we're at about right now, just slightly over that inside the ES Mini. We can see should run into a little bit of resistance right here on the 120-minute chart. This here is a three-river evening star out here. That says that resistance, the next level of resistance, just slightly higher, right around 1597 and a quarter. On the bottom of my screen, if you're taking a look at that, what you see is the relative strength, relative weakness indicator. It is not overbought. It is not oversold. It has more room to run to the upside. You can see as price was making its lows, it was certainly getting in that oversold condition. When it finally did bounce out of this oversold condition, it was at the lows on June 24th. If, in fact, the area, if we see a close today above the price level of 1597.25, there really is no resistance for the ES Mini on the 120-minute chart. No resistance until, quite frankly, it gets up into that 618 retracement level, 1612 or so. And as it would move up to the 1612 level, what it's going to run into, it's going to run into that resistance level of that descending price channel inside the ES Mini here that we're looking at in the 120-minute chart. So 1612, that may be the magic number for the next sell inside this market. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up about 79 right now. ES Mini up at 1593, up 11.5. So let's go back here. Now we're going to switch down into the 30-minute chart. As we take a look at the 30-minute chart, what I want you to notice is that on the EKG of the S&P 500 30 minutes, you can see that it is traveling in the oversold territory. Now it can still continue to move a bit higher out here. If we take a look at where those next ranges are, again, you're looking for areas of resistance. Those areas of resistance either going to be expansions of swing points. In this case here, the swing point expansion that I'm using is from the high out here at about 2:30 in the afternoon. That level was 1592, all the way down to the low that was put in on June 24th out at 1553. So the 1.272 level takes you right around 1602. Now, what you can do this as well if you've got which I'm sure that you do. Most charting packages have a expansion or contraction, Fibonacci contraction or expansion ruler out there, and you're just identifying the significant changes in trend. It's either going to be at that set of swing points or it's going to be just slightly above it, which would be right here at about 6 in the morning on June the 21st, right around the 1597 level. So that's really the high, in essence, that you would be using. I just simply use the lower one, and that says that maybe we see the ES Mini get up to 1602 before it's, which is, so at 1593, that would be another 9 points out there before it really starts to trail off out here. Maybe it doesn't get up there, but that would really be the next area, the next pull-up if the market decides to pull itself up. Again, if we just simply take a look at the 30-minute chart, no different here. We can just simply use where the market really cascaded down to the lows out here. We'd start off at 2:30 in the afternoon. I believe that was right after the Uncle Ben speech out there at the price level of 1647, all the way down to the low that was put in, and just so that we can take a look at it, the 0.618 retracement level at 1611-ish area. What you'll also see is that set of swing points that I used, the 1.68 expansion gives you to about 1615. So I think at that stage is where we find some really significant resistance inside the marketplace, but that's still a decent move above where we're at right now today, 1595. Let's go to out to Nashua, to Lou. Lou, thanks for calling. Thanks for holding. How are you this morning?
Mm-hmm. Yeah. Oh, fine. How
Good.
are you doing?
Excellent. Thanks for asking. What did you want to look at?
If it's too late to get calls on the U.S. dollar, DX.
The U.S. dollar. So if we take a look at the U.S. dollar index here, the first thing I've got up on my screen here, Lou, is the, let me get rid of a couple of things here, is the weekly chart. And the weekly chart right now, it's coming into the swing point. I'm going to pull this down here, the weekly swing point from May 17th out here. Now, the U.S. dollar index, is really a basket of currencies. So one way to really play this means if you're going to play the U.S. dollar index, you really need to be taking a look at, in my opinion, you need to be taking a look at the euro, the yen, and the pound out there. And so it might be easier for you to just play one currency pair versus a basket of currency pairs that you're always having to try to take a look at the weighting structures with inside it to understand what might be happening. Because, for example, the dollar right now this morning is getting weaker against the euro. Let's switch over to the euro, see what we have going on out here in Euroland over at the Queen. And so the U.S. dollar could be getting weaker against the euro, but offsetting that, it could be getting stronger against the yen out there. So I think that, to better answer your question, I think a better trade for you to look at would be to just simply focus on one of the currency pairs versus try to get a potential trade right, only to have it offset because of the balance inside the U.S. dollar index. Now, inside the Queen, inside the euro here, so the euro's been getting weaker, the U.S. dollar has been getting stronger. And that had formed a nice Gartley sell pattern, and it did that here on the trading session of June the 18th. And if, Lou, if we go from the low from April 4th, that low is 127.43, all the way up to the high that was put in on June the 18th. What the euro has already done, it's done a move down to the 0.618 level. 1.30 even Steven across the board was that 0.618 retracement, and we had the euro get down to 1.3074. So it could move a little bit lower, but it's at a normal resting spot for it to move sideways. I believe, based on the pattern that I'm looking at here, the euro wants to move much lower. It wants to at least move down to the 0.786 area. But I think with regard to the strength in the dollar and the weakness inside the euro, you're really at a stage here where it may not make sense to take that type of a trade here just yet, considering this is about 57% of the weighting inside the U.S. dollar. I hope that helps you out, Lou.
Yes, thank you, Steve.
Absolutely. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, Plus, you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 137, S&P up 15, Composite up 32, Russell 2000 up 7 points, Google up 8, Apple up 87 cents right now, Microsoft having a nice morning up 54 cents, Intel up 19 ticks, Cisco up 38. Big movers to the upside here this morning. Leading the charges, Google up $8 and change. Synaptics, SYNA, up 12% this morning. Having a nice morning out here. Trading up $4.33 out at 40.18. Netflix up $3, trading at $2.15. Amazon up $3.30. Mellnex Technologies up a couple bucks. Celgene, CELG up $2. To the downside, Rogers Communications, RCI, is the ticker symbol. They're down 8% this morning, off $3.50. Gold, GOLD, Rand Gold getting hit. That's off 4%. The iShares, the Pro Shares getting hit in gold. We'll take a look at gold. TELUS Corp, TU, is a ticker symbol. They're down $2.50. That's off 8% this morning. 5 below, FIVE, off about 6% off 220. And Mosaic, we'll take a look at Mosaic, MOS, off 2% this morning, off $1.28. We had a call from, we had Lou call from Nashua, and he was taking a look at maybe call positions onside King Dollar out here. And so I just wanted to follow up on that real quickly, then we'll go out to John in Sarasota, and we'll take a look at the SLV. In the case of the U.S. dollar index, because it's a basket of currencies, so the euro represents 57.6% of the U.S. dollar index. The yen is the next weighting structure. That's 13.6% out there. The Great British Pound, 11.9%. And then the Canadian dollar is 9.1%. Then you have two other currency pairs, the Swedish krona and the Swiss franc, that the two of those put together represent about 8%. So you've got, in essence, in order to really understand the underlying instrument of the U.S. dollar and to be able to take the proper position on that, you really now have you've got 6 currencies that you have to manage. I think it's much easier to go find the better patterns inside each of those currency pairs and play those instead of playing one where you've got to juggle 6 different balls out there. So that's really the thinking behind that strategy. There have been some great trades. There were good trade patterns set up here inside the euro U.S. dollar. If we go take a look at the pound U.S. dollar as well, we'll see a similar type of trade out here. And so that meant that the pound was getting weaker, the U.S. dollar was getting stronger. That set up a nice pattern out here. So that was better just to focus on either of those two trades as well. If we go peek in on the Japanese yen, just to see what the yen is doing out here. In fact, let's first go take a look at the yen versus the euro. So the euro-yen out here, currency pair. Now, you know that I like to pay attention to what's going on inside this currency pair because it tracks so well typically with the U.S. markets. In fact, what we see here right now, this is the daily chart. You see a couple of squiggly lines on my screen. One happens to be the U.S. dollar index inverted, and the other, the black line, happens to be the S&P 500 out here. Now, we can see the S&P 500 today is moving up. The S&P is up 14 points. The Dow is up 130 right now. But what we do see is the euro-yen is moving down. That is a correlation. I expect that what that really means, that is, what's nice is that's a divergence that we see inside the marketplace. That says that this move that's underway, this move is not real. This move is real from the standpoint of setting up the B to a C of an A to B equals CD down. But when we take a look at the currency pair. The currency pair, the question is who's going to come into, who's going to get the knock on the door to say, hey, you're on the wrong side of the trade. My reading of the charts and paying attention to the way that things have turned out in the past, it is the euro yen that'll be knocking on the door of the S&P 500 to say, that's enough. The party is over. Just like maybe when you were a kid and you know, you had a party or something like that, you had your friends over and your parents knocked on your door and said, that's it. Enough is enough. That's what we're going to see in the marketplace. And we're going to see that in the marketplace inside silver as well. But right now, let's go down to Sarasota to our man, John. John, thanks for calling. Thanks for holding. How are you today?
Very good, Steve. How about yourself?
Excellent. Thanks so much for asking. Now, you wanted to take a look at the SLV. Tell us what you're doing and how I can help.
Well, a little bit at the SLV, but also your opinion about the silver market itself.
Okay.
My understanding is that currently we're, 50 to 60 to 1 versus gold. And isn't it supposed to be in hard times like 16 or 17 to 1, the ratio?
You know, I don't know the answer to that. I don't know. It's not anything that I have followed from the standpoint of being able to use it as a trading strategy. So I don't know the answer to that. Have you looked into it to see what does it resolve itself typically in one direction? Has it been uncorrelated like that before in the past? And do you know what the result has been?
Yes. My understanding is it has been that way in the past, but currently it is not. And there's a lot of buyers out there doing more silver than gold. Okay. If they aren't there today. There's more sellers than gold. Just simply taking a look at price from that standpoint. It's getting shellacked just as gold is today. Right now, silver's trading out at 1874. But I assume that you're looking for a long entry into silver? Correct.
So if we take a look at silver, here's what I think is the cool thing about gold and silver at the moment. So on a weekly chart, and that's what I'm looking at for the continuous contract for silver, it has a potential price projection of about $17.50. So you're trading at $18.69 right now. It says it has another $1 to go before it makes the 0.786 retracement of the move off of the lows back here in October. Now, what I can't figure out as I take a look at the commitment of traders, the CFTC data each weekend, the commercials have taken the highest level, or the lowest level, I should say, of net short positions, even going back before 2008. So you've got the large money that is really in your camp out here, but that large money has been getting crushed for a period of weeks out here, but they haven't changed their position. Now, the big, large money folks out there, they can afford to be crushed. You and I, we can't afford to be crushed. And so what we need to be able to see is we need to be able to see reversals in the marketplace. And part of that is going to be taking a look at what's going on with the U.S. dollar index. So that means we got to take a look at the euro, because if the euro falls apart, and it looks to me like the euro wants to run much, much lower than where we're at right now. And just because of the 57.6 weighting inside the U.S. dollar index, that should continue to put pressure on the metals. Inside silver, this 0.786 Gartley buy pattern, John, at 1754, this may not hold. It's down it's down another $1, but we're already off 82. So moving down $1, which is, about 4%, 4 or 5%, at these price levels here, it hasn't had much problem doing that. So here's actually the cool thing about it. And the cool thing is this, because of the large pattern that has formed out here, inside silver, inside gold, let's do a couple of things. Let's make the first assumption that somewhere around 1750, we actually do have a low out here. And if you go from the highs back in April of 2011, right around the 49, we'll call it around $50 area, down to the $17 range, just a dead cat bounce alone would take you from 17 to 29. That'd be a heck of a nice move. It'd be a heck of a nice move in the SLV. So here's what I want you to do. I want you to, if you're going to take a look at taking a long position inside silver, wait for silver to get back to that 1740-ish level, and at a minimum, wait for some type of bullish reversal candle out there. Whether it's a hammer candle, a bullish engulfing candle, maybe it's a three-river morning star, some type of bullish reversal signal before you even dip your toe in the water. And that would be, I would call that dip your toe in the water out there. You know, take maybe a third of a position, no more than half of a position out there. And then if you get a sign of strength, then you can either add that position or wait for the pullback. Or that's one way to trade it. The other way to trade it, knowing that just your first target would be $29, just the 0.382 retracement, would be to wait for the sign of strength and then wait for a pullback and then buy that next move into the SLV and into silver. And I think those would be two of the best ways to trade it, because if the $17.50 area doesn't hold, John, it says that silver will come all the way back to the 2008 lows. That's like around $8.70. That'll probably make your 50 to 1 expand even more. I don't know how else to read it, because see, if I go back over to the currency pair for us, right, and we take a look at that, I got to pull up the euro. There's no question that the way that the euro has come off of that C point out there, and I think there was some news. I think Mario Draghi was maybe saying that he wasn't going to be so Super Mario. I think, but before that, it was the market knew before that maybe that's what his feelings were. But the way that this price has cascaded off of the C point, that's some real conviction behind the move. And it says that even though we're near a resting point, that 130 level, that 0.618 retracement, that's not the end of this decline, this move down inside the euro. It most certainly wants to get down to the 0.786 level, but I really think it wants to get to 1.24. So the only way that the U.S. dollar index is going to get weaker is if the yen gets much weaker as well. And that way, that would put, if the yen gets stronger, and that would put the U.S. dollar index, that would be offsetting it somewhat. But with a 57% weighting, with the euro inside here, as far as the metals, this is telling me that gold's going down to 1,100-ish or so, and silver certainly $17, but it looks like even lower prices in silver out there. That's what the charts say right now.
Yeah.
And you're looking at it from a trade standpoint. So with having such a nice wide price, but I think that, and until we see these lows form out here, and we'll really know that we've got some lows, because there should be some. If you think about it like this, there's the non-reportable group. These are the folks inside the CFTC that represent folks like maybe yourself and myself. All of us tigers out there, the individual traders, and those folks are also at record net short positions. And what that says is that when there is any kind of reversal, those will typically be the ones that will start blinking first. And so you should see some pretty decent short covering rallies inside the metals out there. And when you see that, that's where you're going to see some of the wide price spread. So that's kind of where you'll see some of your sign of strength off the bottom inside silver and inside gold. So I think it's having enough of an elastic band move where it makes sense to really be patient on your next move inside either of those two camps. And the third camp just simply being the miners altogether.
Okay.
All right. I hope that helps you.
It does. Thank you.
Hey, you bet. Have a great morning out there. So let's see. Right now, folks, we got the Dow is up 120. I'm going to switch over. You had pretty nice breadth inside the market yesterday, inside the New York Stock Exchange. Let's see what we have going on out here today. Yesterday, you had about a 4-to-1 advancers ahead of decliners, and today you've got pretty good strength as well. We've got 305 declining issues, 2,500 advancing issues. So you're at about almost a 8.5 to 1 if I do my math correctly out there. So pretty decent breadth of the market inside the New York Stock Exchange. Again, this is a bounce out here. This is a bounce that you're going to be looking to sell. The trend of the market has changed. That trend is to the downside. We'll go ahead and pull up the New York Stock Exchange out here right now, see if I can pull that up. New York Stock Exchange gave a great reading. Well, a couple of the indicators that I used gave great readings that we were going to see some type of bounce Even in the newsletter yesterday, I said the market yesterday would finish at or near its highs. That's, in fact, what it has done out here. There has not been a change in the trend inside the market. All we've seen are completions of A to B equals CD patterns out here inside the New York Stock Exchange. Then we take a look at coming off that May 22nd high, that price level being about 90, I wish I could truly read it, 96, 95. That was your A point. Your B point was the June 6th level, right around the 91.37 area. Then it goes ahead and makes a nice bounce out here into the June 18th area, and that set up our C point of our A to B equals CD down. What I suspect is that we will see a high in the market come in. Could be today. It'll be today, tomorrow. Tomorrow is Thursday or Friday. I think Friday would be the end of the move out here. If we go take a look at the ETFs real quickly. Let's go take a look at the volume inside here. If you take a look at the diamonds here, yesterday, now, if you go back to 2 trading sessions ago, so on Monday, the Dow diamonds were moving into a swing point with volume. It was 14 million shares on Monday, June 24th, moving into the swing point low on April 22nd that had 11.7 million shares. Yesterday's bounce higher was with 7.5 million shares. That 7.5 million shares, that's also going against the downdraft of 14 million shares from June 20th out there. So the top of that area, now that, the diamonds could make it all the way up there. They could make it all the way up there. That would be the high of about 149.88. Volume so far today, we've been trading for about 29 minutes, 697,000 shares out there. We know that a lot of the volume really pushed towards the first 30 minutes of trading. Let's go take a look here at some of these stocks. We'll do it when we come back from break. We'll take a look at some of these stocks here that are popping and dropping. Let's see, what do we have? The leader in the clubhouse, the upside, is, it's dust. The dust, that's because gold is getting dusted. Google right behind them. We'll take a look at First Cash Financial Services off 10%. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is up 119 right now. S&P is up 1388. The composite up 27. I wanted to take a look at First Cash Financial Services, but struggling to get this to refresh on my screen here. So if we don't get that, we will just bypass that one here for a moment. So we're going to bypass that. Don't know why that's not loading. I'll take a look at a couple of stocks here. We were looking at yesterday, Walgreens. Yesterday, Walgreens was down on some pretty big volume, but what we were taking a look at is Walgreens coming into a previous sign of strength out here. So it looks like the volume let up off of this thing after the first couple of hours. The volume down yesterday was 8.4 million shares, then 8.4 million shares going into 23 million shares. So volume really had lightened up quite a bit. Now, what that sets up here inside Walgreens, because it looked like with the volume that was coming out of this equity yesterday, that it would go ahead and make a run all the way down to the real breakout, which took place on July 19, 2012, at the price area of right around $34. That had 56 million shares. So it is possible, and Walgreens is trading up today. Volume so far on this move here, about 1.5 million shares, again going against 8.4 million shares from yesterday. But be patient on this. Again, I think that what you want to really do here is this market is in a downtrend. So the trend has changed. We're going to see and this is a volatile marketplace. In fact, almost every day we're seeing at least triple-digit moves out here, and so today no less than that with the Dow, and I'm talking triple-digit moves inside the Dow. So inside the index, it represents only 30 of the stocks out here. A very volatile market, a very quick market, as you can see. And what I would do is start taking a look at some of these stocks here that are getting hit but are still holding up okay. You'd like to see Walgreens really hold this gap, this last breakout area, which would be coming back into about the price level of 42.13, doing it on less than 2.7 million shares, holding that area. Now, it doesn't have a high volume high, but it does have a couple of nice signs of strength. And this was not a bad-looking stock chart out here. Let me put it on a weekly, I should. The daily chart looked pretty good up until yesterday's downdraft out here. But let's go take a look at a weekly chart inside Walgreens. Okay, so on a weekly basis, actually, this thing had made a double top out here. So, maybe we need to be a little bit more careful than just that. The double top was taking us back into the September 15th of 2006 time frame. It made a high out there of 51.60, did it with 36 million shares. And as it came up into those levels, it did it with much lighter volume, 28 million shares, 22 million shares. So it didn't have enough to really bust it out. But what it did do, looks like it got above this area here. So on the weekly chart, now we understand why price actually held here as well, because what we can see is this broke out above an area of resistance, which was really the swing point low from September 20th, 2007, and that area was $45. So that area now is support. That has held as support. We'll see if it holds as support. I'm going to go ahead and keep this on my screen here, and we'll just continue to peek back and look at it, because if it can hold that support level, that would be a very positive thing, just recharging to take out those highs and try to get some volume behind the move out here. Let's take a quick look at Apple here. Apple right now is trading down $2. So you got the composite up 28. Let me see what the NDX here is doing. So Apple is certainly not participating in the gang out here. The NDX right now is up by 25 points, actually the leader in the clubhouse. Imagine if Apple were to go ahead and participate in this move. Well, folks, looks like our time is over for the morning, but stay tuned, because the Money Masters show is up, and always remember, you have an amazing power within yourself. That power is so strong, it'll create a life of abundance, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Wednesday. Look forward to seeing you soon. Take care, folks.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.